Hello students, time to have a look at cash books. So a cash book, book of prime entry, is all the money going in or out of the business. We've replaced our individual accounts for cash and bank. However, they are still individual. We're still going to balance off our cash columns separately from balancing off our bank columns. We've just joined them together in a handy place. This version is a 3-column, and what's actually happened is we've got discounts allowed on the debit side, discounts received on the credit side. They're memorandum accounts only, they're just for information. We still have to post to our discounts allowed and discounts received, even if our cash book is part of the double entry. Whereas with the cash and bank, if it's part of the double entry, that's our debit entries, those are our credit entries. 2 columns, we'd take out the discounts, that makes life a lot easier. We'd have a separate journal or day book, discounts allowed and discounts received, journals. Debit side is the money coming in, I've cheated putting the word in. Credit side, money going out, just like ledger accounts. I mentioned it might not be part of the double entry. Okay, I'll have a separate cash and bank control account, in which case I can also take out the balances so that my employees don't know how much money is in the bank account. And then we can analyse it later, which means you're going to add a few columns. I'll show you one that I've got completed, and we can also split them so that one member of staff, as I mentioned earlier, does the debit side, one does the credit side. Let's have a look then, let's fill them in. 1, opening balances, we bought some goods. Much less wording than you'd put in a real life. 120 cash. And then we bought a computer. That's a check, so it goes out of the bank. And then we've got some money coming in. So cash sales, that has his notes and coins, as in we received the money at the time of sale, compared with a credit sale where we issue an invoice and get the money later. This one, cash received, a lot of cash. Then we've got one that only needs entering in this, but what I always used to do was try and keep them on the same row. I haven't done one for ages, but transferring cash into the bank. So into the bank, I'm paying some cash to, it just makes it easy to check if I keep that transaction on the same row. I've done it thousands of times. Receive from customer, so this is Mike and this is sales ledger, so that means it's a customer with an account we invoiced some time ago. He's taken a discount and he's given us a check, and then we've paid a credit supplier purchase ledger, so there'll be entries in the purchase ledger, and we've taken prompt payment discount and we've given him a £100 check. And then we bought some stationery. For £48 cash. Quite possibly £40 plus VAT, but AQA don't deal with that. So all it needs now is to total up. So that £10 will go into our discounts allowed and our customers account and the receivables. Cash and bank we'll just need to do the other entries for. Now, because it's not analysed, it doesn't really give us a nice list of what to do and where they're all going, so we'll see the analyse next. But first of all, we'd better balance this one off. Let's have a look. So our cash, we had 20, we had 360 in, just check 120 out, 200 into the bank, 48 paid. So as it should be, we haven't been given a date for this. Carry down on the credit side. Just got disrupted then by a pop-up coming. I don't know whether you can see it or not. Just to annoy me, AVG just telling me some messages on my screen. And then the bank of course can be carried down and brought down either side. However, in this case it's just £20 left, so they've gone from being overdrawn to having £20 in the bank, so that's okay for a week or so. Ready to carry on again. So that's the simple 3-column version. 3 columns because it's got discounts, cash and back. Doesn't really help us do our postings, but the analysed will. So let's have a look. One that's already completed, and I've listed the postings, so you can freeze this if you want to have a look for a little bit more analysis. So just the debit side first. That's the bit that we've already seen. They're by and large the same transactions, just changing names and whatever. And what we've got here is 3 extra columns to help us analyse our data. So we've got a separate column for cash sale, the others just the bank bit, and then we've got one for receivables, so we know how much to put in our receivables accounts. And once we've got it totaled, notice there's no balancing off on this one, so it's one where we don't want employees to know how much money is actually in the bank account. We need to debit the discount allowed because it's a debit, credit the receivables and the customer account, credit sales, and credit receivables and customers account with the money that we've got. In this case it's only Anne, and then so just one customer account. Now the others, other or sundries, all sorts of items go in there, so you have to look at them individually. In this case, because it's cash, it would actually just go into the control account. Credit side, so these are our payments. We've bought some purchases, we bought the computer again, and the stationery, paid John, and then the money going out to the bank. So this is a credit side, so most of the entries are debit, with the exception of the discount, because this is a memorandum only account. Credit discount received, debit payables and the supplier, debit purchases, the assets, of course, this is office equipment, or it might be motor vehicles, we might have separate accounts for them. Office expenses for the stationery, and then the £100 goes in the payables and in John's account. It's only one again. And the other again, just have a look at all the items that go into other accounts. Could be capital, could be all sorts of things in there, and we'd have to post them selectively, post the ones that need. So just to remind you, customer may choose not to let its employees see the balance, so you didn't see it on here. You can set that up on a computer system as well, and you can restrict access to the one side. That's the fraud prevention. So the analysis columns though can actually replace double entries, so we can effectively have just one spreadsheet does all our accounting. I've actually created similar accounts for businesses with turnover of over £1 million. They didn't, however, have credit customers, at which point you start investing in Sage or something, or Xero. The analysis columns, we create them to suit that business. There's no limit. The ones I've worked on most often in real life have like 80 columns between the income and the expenses. If the company was VAT registered, other accounts to cash, bank, receivables and payables, like the purchases in other words and the sales, would be net of VAT, and there'd be an extra VAT column. And then again, the control account, if we hide the balance, and then we need to reconcile it with the bank statements. That's a different task. That one's coming up. Some bank statement work's already on, being posted. And in cash, of course, you have to check, well, at least we know how much is in it, and we can check that. So the last version I'm going to show you is the combined and analysed. So you can see here, we've got the debit and the credit side. We've got the analysis columns. It's starting to look very, very big, very confusing. I'll automatically actually just put this on separate tabs because you can link the formulas and still balance it off the same way. Difference here, okay, well, just an assortment of accounts, remember I said we create them to suit our business. Some of them got 0 in though, and then I've listed the double entries again. The discounts allowed would be the total. Now we've actually got 2 customers taking a discount off us, so we need to post them into the customers' accounts in the sales ledger individually. Sales 400, and again others, we've got a couple more items, or we've got we've got some capital coming in, so that would actually be credit capital. That one, we've got book balances here, so we wouldn't necessarily need a separate bank and cash control account. And then the actual money that our 2 customers have paid us goes into the receivables and also goes into their individual accounts as credit entries. Remember, the customers' accounts is the same way round as receivables. Payments, we've got 2 suppliers in our purchase ledger. They've both given us a discount for paying them quickly. We've paid them £100 and got a discount off both of them. We've also got a cash purchase, moved some cash around, and we bought a printer, which is in our assets. So these are credit entries. The only credit entry we would post from it, because it's memorandum again, is the discount received. That's the £30, and that will go into the payables, and then we'd have to split it to put it into our suppliers' accounts as debit entries. And then we debit the purchases, debit the assets. I've actually put that on the wrong row. That's not that much. Not total disaster. But again, we might just have one asset account. We might have IT equipment, motor vehicles, etc. There's nothing in our admin in this case, but it would be a debit if there was. Debit the money that we've actually paid to suppliers as a total. Remember, books of prime entry reduce the postings into these accounts. If you made 50 payments a day, we'd be able to post it daily, saving an awful lot of ledger work and a payables account that we couldn't manage. But the suppliers account, still the same size, still debits, we split individually, and that's all the versions of Cashbook that matter.